Hey everybody, it's Larry Berman here. Depressing week on the markets for the bulls out there, and for the rest of us who are just depressed because golf season's over here in North America, at least where I live in North America. Anyways, obviously a lot to unpack in the charts. We had a lot of volatility, both to the upside and downside, within sectors, within markets. Um, we started to see who Trump's going to populate with his administration. A lot of controversial names thrown out there. Um, Completely unsurprising to me at all. Trump believes he has a mandate. He believes the American people gave him one with the red sweep, and he's going to shake things up. So whether that translates into more volatility broadly for markets, yet to be determined. Some of the bulls came out this week with like an Ed Yardeni saying he's been bullish and he hasn't been bullish enough. Um, I shake my head sometimes. Again, just as a value kind of tilt to me. I struggle when the markets are overvalued. It doesn't make a lot of sense. Why? We're running 6% deficits of GDP already. When the next downturn hits, it's going to be tough. Meanwhile, the economic data keeps trickling in, a little bit better than expected. Fed has to walk back. Powell has to do how do you do? Sorry about that. And then a couple of Fed speakers follow that with, no, we're still cutting, like the perennial dove Goolsby. Anyways, let's dive into the chart room, and I'll stop rambling for a minute. Okay, Cisco Systems used to be the poster child for the internet going back 25, 30 years. Remember it deeply when Intel and Cisco were the things we talked about on the trading floor. And, who's in it? How much do you have? And of course, today it's Nvidia. So Cisco reported this week, seemed to be a little bit disappointing. Overall numbers pretty good, but a little bit disappointing. Not out of line at all with what the markets have done in recent months. So you broaden it out a little bit, and you go back to the stock has not taken out its 2021 high. That seemed to be a little excessive there. It's got up into resistance here. It's not over surprising. I'm not really trying to comment on Cisco here, other than being that it brought back memories for me. But this is Nvidia week, folks, and this is the stock that is going to report on Wednesday, and it's been the driving factor. So what Cisco and Intel were 25, 30 years ago is what Nvidia now is today, with a handful of the other AI names, playing in the space and building the infrastructure, for the next wave of technology. So what Nvidia says is going to be really, really important when you look at earnings and expectations. So, all the analysts will stumble in front of each other to get their newer numbers out based on their latest modeling. And you can see pretty much across the board that everybody who's come out in the last few days, scattered between the most conservative buy at 155 to the upside, with the most aggressive at 200. And so, pretty broad range. When you take the weighted average, or the equal weight of the 82 analysts that follow it, 53 have forward-looking price targets that are disclosed. It's 157.53. So, the vast majority green here, buy signals, a little bit less on the neutral, a little bit more. So the general ratings that have come out have actually come down a little bit. So that's what this red arrow is here. So more often than not, the more recent ones have come off a little bit. So it's going to be pretty important what Nvidia says here. And so the correction that started, on Thursday and Friday this week where the market seemed to reject the 6,000 level and broke down below some support. Let's have a look at the intraday here, because we're now in gap land. Okay, so election night gap. Euphoria, Trump, wonderful, wonderful. We start getting some news out this week until who's the administration, market sells off. It's come back to the first part of that gap. And on Friday, broke into it, looked like it was accelerating, and then cooled off a little bit again. So you never know, without the benefit of hindsight, what these things are going to do. But gap theory tells us, so if this is going to hold and Monday, Tuesday, and into Nvidia, we come up here and get into this gap again, then that would be a real positive sign that this is a breakaway gap. It's going to hold and should be used as good support. All stops get trailed up under this gap, looking forward for the next month or two. But if this gap doesn't hold and we come back down here to test the election night highs, then that becomes the next support where stops should be. However, if that doesn't hold, look out below, because while we have the pre-election November lows as support, there's not a whole lot below that for another couple hundred points in terms of market risks. So, you've got this market that's overvalued. You're starting to get some news. You kind of saw a bit of a sell the news thing this week. And so, that's, to me, this is what this week's gonna be about. When we look at other sorts of risk metrics, the VIX and the VIX curve and what it's doing, you can see live here in the aftermarket that we're taping now after the close on Friday. So vol spiked up during the day. Again, as the markets cooled around 2 o'clock in terms of the downside, VIX came in a bit. And so is this a reversal? Are we going to see a spike in vol? Is that gap going to close Monday, Tuesday, news over the weekend? So going to be pretty interesting next week. We'll learn a lot more. And if those gaps don't hold again, with the overvaluation in the market, you're going to probably see a little bit of selling show up. And what's the catalyst for all that? It's the monstrous amount of debt and who the Treasury Secretary is going to be and how much control does Trump have over him or her. And it looks like it's going to be someone from the hedge fund channel, Cantor Fitzgerald boss, or it's going to be a famed hedge fund manager, running Treasury. So, we've been used to Wall Street guys under Trump #1, where we had Paulson and Geithner. You had the academic lead under Biden. Historically, you've had a mix of street cred and academia there, and so looks like it's going back. Those savvy people, the whisper is they're going to print a lot of coupons in the first part of the year. They're going to blame it all on Biden and try to clean things up and cut some costs and do a little bit better on the budget front with their 2-year red sweep here. Trump's threatened all the people in Congress that if they don't fall in line, he's going to aggressively use some of Elon Musk's money to run people against them. And so there really is a, put your thumb on the scale. You can call it what you will, but I love that he's trying to clean things up. I don't love the way he's doing it, but maybe it has to be done this way. I'm really at a crossroads here in terms of Trump 2.0. Again, I hate his style. It doesn't align with my value system, but the system is broken. I've talked about it for years, and we need to clean it up and fix it. So, maybe we do need a Donald Trump. Maybe we do need an abrupt person who, can cut and slash and burn and anyways, it's going to be interesting. But is it bullish with an overvalued market? It would be bullish with an undervalued market or a neutral valued market, which is kind of where 2016 was. But that's not the story today. And the debt problem is worse. And the tax cuts he thinks he can pass, there's going to be the fiscal challenge there. So unless they can really cut into expenses elsewhere, I don't see tremendously where that's going to come. There is some excess. Obviously, EV credits and things like that, are going to go away to help pay for other things. But cutting tax for corporations at these levels and for the wealthiest citizens in the country is not the fix. Anyways, that's my 2 cents this week. Caution is still the message. And have a good one.